to a much firmer move. Let's get right to the floor show. We are joined by our old school, old-time, fabulous traders, John Corpina, Keith Fitz-Gerald. Gentlemen, we know that for the week, the Dow is the only major that looks to gain here. But I would like to ask right off the bat, John Corpina, where's your focus at this point?
Yeah, my focus is trying to just get through earnings season at this point, right? We kind of know that the sentiment is heavy and is going to sit on this market. And we also know that CEOs, CFOs are really going to rely on the current scenario, the current situation. Rising interest rates, geopolitical uncertainty, global economy uncertainty. So what is that forecast going to be moving forward? We know that it's going to be rocky waters. We know some of these calls are going to be tough. It's just the ripple effects that come out after that. S&P has gotten hit. We're trading at that 3,600 level. Keep teetering right around there. We're going to need some time to get through here at this point. But from these calls, from these earnings reports, like I said, we know it's going to be choppy. If we could just get through some of this and managing of expectations, I think we're going to be okay in the long run here. But it's going to take some time for us to get through here. Obviously, these banks are going to be pretty significant for us to hear what's happening there. We're going to get IBM next week. We're going to get Tesla. We're going to shift into other sectors there. Should be interesting to hear what they have to say. But right now, it's going to be a little choppy.
Yeah, that is true. And again, I don't want to only focus on banks here, Keith Fitz-Gerald. Tech has just gotten slammed over the past, I want to say, 15 trading sessions. I mean, the semiconductors, that has been a very ugly picture here. And whether it's the semis or some of the other big names, these cuts over the past 15 sessions, I mean, I know I keep asking you this question, but they each time look even better and better as a discounted quality name. Any favorites here?
Oh, are you kidding me? Absolutely. These are approaching what I euphemistically called stupid oversold levels, Liz. I mean, people just need to look around. Everybody's becoming more tech-oriented. 90% of the data that has ever been created in the history of humanity has been created in the last few years. These companies are being priced like they're going out of business. So I'm looking at the Apples. I'm looking at the Microsofts. I'm looking at anything that's getting it, you know what, handed to it right now, because 3, 5, 10 years later, those are going to be the companies that go right back to the head of the class.
Well, I know, Keith. However, each time that we say this, and you're looking at a year-to-date picture for Microsoft and Apple, new lows continue to hit. I mean, we're not quite at the year lows for Apple, but what do you say to investors who say, Fitz, you told me to buy Apple at 149 and we're at 138 now?
Well, I would tell them, if you're an investor, fine. If you're a trader, that's entirely different. It depends on your psychology. We've seen this playbook before. Everything from the financial crisis of 1871, 1903, 1929, 54, 73, 89, 87, you name it. We know how this playbook works. And if you don't have the time, that's one thing. If you've got to sell because you have to, that's another. But if you're investing, this is what it's all about. There is success and failure. The markets go up and down. We're just living at a point in time where the tide's going out. So you got to look at that. Do you go to your favorite store when it's on sale? Answer is yes. I submit you need to do the same thing. The world is the biggest market in the stock market.
And Liz, let me just support that for once.
Yeah, go ahead. Sure.
Let me just support that for 1 second. Go back to March of 2020 when we're going through a global pandemic shutdown and the markets are getting completely smoked. Who would have thought we would have traded the way we did past that? So if you take a step back and look at a long-term chart, you see these little blips, like Keith just named all these years, all these little blips in the market here. That's healthy. It has to happen. It has to flush itself out. 3 years from now, if you say to someone, you could have bought Amazon at $120, they're going to scratch their head and say, why didn't I?
I get it, guys. I get it. And I look at the semiconductors. None of these things, Apple phones don't work. Google phones don't work without the semiconductor space. And that said, there just seems to be this hesitancy. Keith, do you think that maybe some data that we start to get in a week or two could shake through? Or do we continue to worry that the Federal Reserve has to, in many people's belief, some don't believe this, but raise rates? I mean, we're now looking at 100% chance or probability of a 75 basis point hike for the November meeting. Is that the right move?
I think it's the latter, because my belief is the Fed has been out to lunch somewhere. Where, I have no idea. The American public isn't stupid, Liz, and they know this is all about the Fed now. They know it's all about leverage, and they also know that the Fed is increasingly wrong. The data is insurmountable, yet they won't pivot. They won't change their opinion. And I think the American people are coming to terms with that. So is there going to be sentiment? It's going to come from the Fed. The earnings are probably not going to be as bad as everybody thinks, which gives me hope and faith, because that's how the market works. But I'm going to be looking to the Fed, which I think has just lost the plot a long time ago.
I want to thank both of you for a very special reason. You know, today we're celebrating the 15th anniversary. We rang the bell down at the NASDAQ for 15 years of starting at the very bottom. You guys were always there. Okay, Fitz, John, you know, it didn't matter. You looked at the competition, they'd say, don't go on Fox Business, but you always stuck by us. And I do want to thank you and thank our head of our network, Lauren Pedersen, and the OGs, the originals who came when it wasn't easy, guys, and that was you. Thank you.
And we have to thank you, Liz. You know, you were back down here on the floor when it all started, walking with your microphone into the IPO crowds. You know, you put a big mark on this place here, and you clearly have helped that network.
I'm for Clem.
Absolutely.
No, I'm telling you, this is my third child. Okay, Fox Business is my baby, and it's really amazing to have a day like this, gentlemen. Thank you so much.
Thank you.
Thank you.
Keith and John, always a pleasure. Today's big.
Hi, it's Keith here. Thanks for checking out today's highlight clip. What'd you think? Did I make sense? Is there something you'd like to add? Make sure you leave a comment down below, and of course, click subscribe to keep up right here on YouTube, or sign up for the email newsletter at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and a whole lot more.